Today's interview is with Seth Bradley. Seth's a former attorney turned real estate investor. And Seth said that it took him a while to get that mindset shift from, he was a real estate attorney. It took him a while to sort of dive into real estate and get off that transactional side and actually invest in real estate for himself. So he started out with some house hacking, did a lot of flips, still does a little bit of flips and builds his own portfolio, but he's also now doing large multi-family deals. He's amazing capital. So really interesting interview. Stick around for all of that. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multi-family real estate investor Barri Griffiths. Now today we're joined by Seth Bradley. Hey Seth, how you doing, man?
Doing great, man. Excited to jump in the ring with Barri Griffiths.
Awesome, man. Awesome. I'm excited to have you, and you have your own podcast, and so this is going to be a super easy interview, no doubt about that. But before we kind of jump into the meat and bones of the conversation, do you want to give us a little bit of a background about who you are and what you've been up to?
Yeah, sure, man. And feel free to stop me if I go in too deep here, but I'll take it all the way back. I was born in South Korea and adopted when I was 3 months old. By a couple of wonderful folks in the middle of nowhere, Wadestown, West Virginia. But that kind of gave me the foundation of who I am today. I mean, I grew up in the bluest of collars, right? My dad's a retired coal miner. My mom's a retired school teacher. And, they just instilled that work ethic into me. But, along with the work ethic also comes kind of that conservative mindset. So growing up, I never even thought about owning real estate or running a business or anything like that. The only folks in my town that did that were, the local politicians like the mayor and people like that. Like it wasn't something that normal people did. So growing up, it was all about getting the best job I could possibly get. And not to brag or anything, but I'm a pretty smart guy and school was really easy. So I was like, okay, I'm going to be a doctor. And I went down that pathway and actually went to med school for a little bit. Actually finished my first year, went into my second year before I finally said, I realized that it's just not for me. I just did not want to do it. Everybody's looking forward to, the clinical part. And I wasn't, I knew I didn't want to do that. So I dropped out, got up in the middle of a class and walked out. And it took me some time to figure out what I wanted to do. I ended up getting my MBA just as kind of like I knew that would work with anything. But then I still had that blue collar mindset that was like, okay, well, what's the next best job I can get other than being a doctor? And to me, that was being a lawyer. So I went to law school right after that, did well there, got a big law firm job. It wasn't bad because I was in real estate and I've always been drawn to real estate, but I started investing in real estate as soon as I got my first law job. House hacking into a duplex, fixing flips, buying holes, all that kind of stuff. Ended up working my way up to large multifamily at this point. But it just took me a really long time to get out of that, that conservative W-2, trading your time for money type of mindset to be where I'm at today as, a full-time entrepreneur.
Yeah. No, that's really interesting. That's such an interesting story. Like you said, it's a mindset thing a lot of times to invest in real estate, right? Yes, you need money and you need skills and whatnot, but it's just that, for one, I think it's the realization of what's available and what's possible and that it is such a great investment, right? And it's like you said, growing up, if you weren't surrounded by that, you thought you needed to be the mayor to invest in real estate, right?
Right. Yeah.
That influences doesn't help, and I think if people are around real estate investors more, they can see that it's possible for anyone.
Yeah, it's totally a mindset thing, man. I remember growing up and there was this one politician, he's actually a senator now, but back in the day, like his family owned what I thought at that time, like everything. I was like, oh my gosh, they own like the local grocery store and the building that it's in. And like one of their family members was a doctor and he owned his own clinic, the real estate that was in the clinic. And they owned, a couple of rentals, like literally like 2 or 3 like single family houses or something. And I just thought, wow, these guys are just absolutely crushing it. Like it's unbelievable that they own all this stuff. And it just takes you a while to get over that mindset, man. Like nowadays it's like, we're taking down 100+ unit apartment buildings and, I would have never thought about something like that growing up. It just wasn't in the cards. Right.
So what was it that brought you to real estate? Like you said, what you weren't around it, apart from seeing these people do it. Did did you dream of doing it back then, or was there a moment later on that kind of triggered that?
No, well, back when I was a kid, I didn't really think about doing it. I mean, it was just kind of like this far-fetched thing. At that point, it was just like, best W-2 job I can get. And I started kind of having those realizations when I was a lawyer, working at big firms. You're closing these deals. These are big commercial deals. These are $100 million plus financings and purchases and sales. And, you meet the clients, you meet them face to face, and you're just like, whoa, these guys are regular dudes. They're not Donald Trump or somebody like that. They're just regular guys like you and me. And I'm helping them close the deals, right? Like I'm advising them. They're asking me for help. And at that point, I had a little bit of a realization like, all right, well, I'm getting paid for services. I need to get on the other side of the table where I'm getting paid the equity and the long-term, income and appreciation rather than just getting paid, time for dollars, which is what you want to get away from. So that was kind of the first realization I had. And I think a lot of people have a problem getting over that gap, right? Like think about real estate agents and brokers and people like that are in the real estate industry all the time, and they don't own any real estate. Like they don't invest themselves. And it's crazy that they don't, but it's kind of a mindset thing. It's kind of a get caught up in the big transactional thing. Like, okay, well, I'm just going to get paid a big amount and then I'm done. I don't have to do anything. I don't know. It's definitely a mindset gap to bridge.
Yeah, exactly. And I'm always surprised as well that people a lot of times that are in the best position, brokers or lenders or property managers, right? They have the boots on the ground, they have the knowledge, they're getting access to all the deals, they have the knowledge about, the market and everything that goes into that. And yeah, like you said, it's very transactional. They prefer to, especially brokers that, they work from one transaction to the next. And you're always looking for the next job, right? It's like flipping, right? And there's nothing wrong with flipping.
Exactly.
But it's always transactional. Once you've sold that flip, you have to buy yourself another job. Whereas, especially in large multifamily, right? And especially if you're investing as a limited partner, you invest, you find the GP that you like, you find the deal and the area that you like, and then you invest, and then you sit back and get that mailbox money every month. And I think that's also how you build long-term wealth as well.
Yeah, I agree, man. I totally agree. And especially for folks that have a W-2 that they don't hate. I mean, not everybody wants to be an entrepreneur. Not everybody wants to be a full-time real estate investor. They love the career, or they at least like it, and they get paid well. Passive investing is the best vehicle for that. I mean, you can diversify into these huge commercial assets that you get the economies of scale, you get the sophistication of the property managers, the vendors, the contractors, all those people, and the people running the deal, compared to trying to do a fix and flip or, a wholesale business, or, just buying a single family here and there. There's nothing wrong with that stuff, but it's just, to me, it's a little bit riskier, and I've done all that stuff, and it takes a lot more of your time, right? Like when I was billing 2,200 hours a year at big law firms, and we used to have this kind of tangent, but we used to have a 20-minute rule. If you didn't respond to the client's email or phone call within 20 minutes, you're in trouble. So you've got to be really on top of your game, really responsive. And when you're trying to flip houses, especially from a distance, or, you've got tennis toilets and trash and all that stuff, I mean, you don't have time. If you have a really demanding job, you just don't have time to do that kind of stuff. And that's where I started getting into trouble, because that was taken away from my career, and I realized it. And at that point I needed to figure out what else I could do. And that's when I started investing in passive syndications, and then eventually into active syndications.
Yeah, well, that's interesting that you started like with a house hack and flipping and whatnot. Was there any reason, because you're on the transactional side of these large deals, right? Was it a mindset thing personally as well, that you didn't start with bigger commercial or bigger multifamily at that point?
Oh, for sure. I think my journey is pretty similar to a lot of people, man. I just started listening to Bigger Pockets. I knew I wanted to be in real estate. So you listen to Bigger Pockets, you listen to that podcast. They're all about residential, single family, the smaller stuff. For the most part, they've changed a little bit, but I got involved that way. And, the easiest way was the house hack. So I house hacked into a duplex, and it is a mindset thing. You're just like, okay, well, what can I do? How can I do this? So the cheapest way is the house hack. And that's what I did. And then eventually, like I said, seeing those other people close these deals, these big deals, that they're just regular people. That's when, the mindset started to shift a little bit, started to, network and talk to these people that did these types of deals. And, a lot of people say, even if you want to be on the active side, maybe you should invest passively first, check it out. Maybe somebody will give you a little peek behind the curtain and kind of, give you a good look at what it's going to be like. And, if you, after that, you still want to invest actively and go after these big deals, then go for it. But a good way to get started is passively. And that's the route that I went.
Yeah, that's cool. So what was the transaction? You did how many single families did you do, and how many flips, just so people get an idea of what you were doing before you transitioned into multifamily?
Yeah, I don't know. It wasn't a huge amount, man. It was probably like a dozen a year, something like
Okay.
that. I mean, and they were from a distance. That's the issue, man. From a distance is a problem. I mean, when you're dealing with residential contractors that, you're trying to get a bargain, right? Like you're trying to get the lowest dollar amount, and maybe that's not the best. Well, I know it's not the best strategy. But when you're dealing with those types of contractors and they're 2,000 miles away and you can't keep your eyes on them every day, very difficult, very difficult. They'll get off track, get off of their budget, get off of their quality of work very quickly. And it's just it's a tough business. And then when you start getting into these bigger deals, though, it changes because the level and the quality and the sophistication of the contractors goes up. And that goes across the board with property managers and everybody else too.
Yeah. So how did that transition? Obviously, you started investing as a limited partner, but then how did that develop into being a GP?
Yeah, I got started capital raising. I mean, that's mainly what I do now. I will take down my own smaller deals at this point, but as far as when I'm presenting deals to my passive investors, there's a level of risk there that I won't expose them to, that I will expose myself to. So, for instance, I invest in Cleveland still. Cleveland's not, that typical ascending market. It's actually descending a little bit, but it's one of those markets that there's enough people there. And if you know the streets, the neighborhoods, you can invest there and get a really good cash flow return. But as far as placing passive investors there, it's a little bit harder of a sell, A, and B, I don't know if I'd want to put them there because there's a little bit more risk. I'd rather raise capital for other people's large deals and partner with them as co-GPs, and also offer my legal services as kind of an in-house counsel type of role. And that's kind of how I got started partnering with people on these bigger deals. But, those are the ones that you hear about in the Sun Belt and the ascending markets. Those are the ones I feel comfortable placing other people's money in, not necessarily my own, because I'm a little bit of a risk taker with my own.
Yeah, that's interesting. Well, let's talk a little bit about the Cleveland market. What made you choose that? Like you said, I'm guessing when you say descending, you mean in terms of population?
Yes. Yeah. I actually met someone who was also an attorney out on the West Coast, and he grew up in Cleveland. And this was when I was first starting to get into real estate and starting to scale a little bit with the flipping and that sort of thing. And he was like, check out Cleveland. And I was looking at like Midwest markets at that point to, get some numbers going, and flew out there with him. I liked it. It was not what I expected. I was like, okay, well, there's some growth, at least there's a few cranes in the air. There's some good neighborhoods, some bad neighborhoods. It's like, this is work. So I really just got familiar with the neighborhoods, with the streets in Cleveland through, the residential business.
Yeah. Cool. That's interesting. And it's worked out pretty good so far, I'm guessing.
Yeah, I mean, I still do those things. I just got back from Cleveland. I've got a couple of active flips going there. I've scaled it way back because it's difficult, but we have a team in Cleveland, like a contracting team. So that's the only way that I let that business continue, because I don't have to deal with one-off contractors. We have a contracting team that just handles everything in-house. And we were looking at some bigger deals while we're out there too.
Oh, very cool. So the contracting team, they work for you only, or it's just like a GC, you have a general contractor that you work with?
Yeah, right now we have enough business for them. They just work for us.
Oh, wow. So they're part of the business. Oh, that's pretty cool. And that's just flipping? You're doing flips for you, or what do they do?
Yeah, it's not quite big enough of an establishment to do like a big deal. I mean, we looked at a 120 unit deal when we were out there, and we actually put it under contract. And then we have another deal that was like 51 unit mixed use. That's something they probably couldn't handle. They might be able to, do some of the smaller stuff, but we've got to hire a commercial GC for something like that.
Oh, interesting. Very interesting. Now, going back to the capital raising side of stuff. How was it initially? I'm sure now at this point you've got a track record and you have experience doing it, but early on, how was that challenge of going to maybe friends and family or people that you knew and saying, hey, I'm in real estate, and I know you're an attorney, so you can talk the talk and kind of walk the walk, but still it's still challenging, right?
Yeah, I think it's always challenging. I mean, there's a lot of people that say they can raise capital and they can't, or they say they can't because they think they can, and then it just doesn't come through. I mean, it's really difficult for somebody to send you $50,000 or $100,000 or $250,000, whatever. That's a lot of money. I mean, I think we lose sight of that sometimes. We just start thinking about these big numbers, like we're buying a $20 million property or something like that. And we lose sight that, these people are sending us $50,000. Like, that's more than most Americans make in a year. I mean, it's an incredible amount of money that we're asking for. So you've got to be very careful with it. And it is difficult, especially at first. You don't have the track record. At first, when I started, I didn't have the platform either. I didn't have, the podcast or anything like that. So people, I'm an attorney, but they're like, well, I just remember you just getting drunk in college or something like that. You know what I mean? Like,
yeah.
A lot of your friends know more about you than you want them to know. So it's just like, it is difficult to get some momentum going, but after you start, getting a platform like you have and like I have, with a podcast and starting to put your, demonstrating your knowledge to folks on social media and other platforms, it gets a little bit easier, and you start kind of learning the marketing game.
Yeah. And at this point, what is your system? Do you have a system for it, or how are you finding the investors? I guess, is it through your podcast, or is it more referrals at this point?
Yeah, I mean, the most effective way is referrals, right? You get people to invest, and then you say, hey, well, do you have anybody that might be interested? And you've already got that rapport with them. That's the best way. I mean, that's the warmest lead you can get, is a referral. So those are the best ones. But then you just find other ways to generate it. I do it through LinkedIn lead generation, just like reaching out to people via messaging. My target audience is attorneys. I speak their language. I was in their shoes. So that's kind of who I go after. And so the LinkedIn lead generation is cool, because you can actually target your investor avatar. You can target attorneys or doctors or former pro wrestlers or whatever it might be. So that's a really good way. And then Facebook ads, I do run some campaigns. If I have a live deal, a 506C deal, I'll run a Facebook ad campaign. Those don't generate that many good leads so far for me. They generate a lot of numbers, but not necessarily investors that actually end up investing, at least not yet. We'll see. I mean, that may turn over. And then just every single day being consistent with the podcast and with the social media posts, and just putting yourself out there, so that when people do find you and they look you up, they see that you're knowledgeable. They see that you're, someone in the industry that they can trust.
Yeah. And do you mainly do 506C versus 506B, or does it depend on the deal and who you're working with?
Yeah, I've actually have not even done a 506B. I've only done 506C so far. I am looking for someone that wants to do a 506B so I can partner with them, though, because there are a lot of investors that don't qualify as accredited and they want to get involved with these deals, and they're sophisticated enough to know how to invest, and I want to get them involved. But yeah, typically 506C, or for the smaller stuff, we'll just do a JV with a couple of money partners.
Okay. Yeah. Interesting. So what was the last deal that you did that you can talk to us about? Is there a deal that
well, just closed a 246 unit property in Winston-Salem, North Carolina. That closed last month. Partnered with Exponential Equity. It's Hemobadiani. Awesome guys. I've known them for a while. I can actually credit COVID for getting to know them. It was just kind of a LinkedIn type of, interaction thing. And then I ended up flying out to North Carolina. I lived in Charlotte for a little while, met them for drinks and stuff like that, and just really hit it off. Sophisticated guy, knows what he's doing, has the track record. And this was a great deal. Winston-Salem is a market that I'm really bullish on. And I had actually already raised capital for another deal last year in Winston-Salem. So I was very familiar with the market. And when he landed this one, I was like, I know how this market is. This is awesome. Like, let's move forward. So it's a great deal. Just closed last month. A little twist on it. It's a LIHTC deal. So low income housing tax credits. A lot of times we stay away from those deals because there's caps on the rent, and that means there's caps on the value of the property that we can push. But this one was really interesting because the rent caps were almost $450 to $500 over what they're charging when we took the property over. So they're not even a factor. We're not even going to be able to hit that increase. So they weren't even a factor.
Oh, wow. And for people who don't know, just on a high level, what is a LIHTC deal?
So the government will give you housing tax credits to develop properties for low income families. But in exchange for those tax credits, they put certain caps on how much you can charge for rent, because that's the whole point. It's low income housing. They want a certain percentage of those apartments to be rented to low income housing families. So that's desirable for the people that build the project because they get these tax credits. But for somebody, once they're done and they're trying to sell it to the next person, if there's a 7 or 14-year contract on there and they can't charge a certain amount above the rent, it's not that desirable for the next person to come in because they can only charge so much in rent. So they can only put so much money into the property to, put it into the cosmetic stuff that we all do. But that's the issue. But if you go over that first hump and actually look a little deeper and say, well, what's that gap? What is the delta between what they're charging now and what the LIHTC caps are? If it's big enough, like with this last deal, that doesn't even matter. It doesn't affect the property at all.
Yeah. And it's got to make sense, right? And some just don't make sense because of what you said, and some like yours did, right? What is the business plan on that? Is it light renovations, or do you need to do a lot of renovations, or no renovations maybe at all?
Yeah, very light renovations.
Okay.
Because they did not increase the rent. It was kind of a mom and pop shop that was running the property. They just didn't bring the rents up to market. So we're just going to bring the rents up to market, but on the turns, we're going to put a couple $1,000s in per door.
Sounds great. Sounds like a great deal. What was it about Winston-Salem that you like? You said you're bullish on that market.
Yeah, I mean, the competition is heating up now, but it was, the competition is a little bit lower. Like when you think of North Carolina, if you're not from that region, you just think about Charlotte and you think about Raleigh. You don't think about, these other places. Winston-Salem has the population as far as like the numbers. They have the population growth. They have the job growth. They have the job diversity, all the stuff that you look for in these markets that we all know about, Dallas, Phoenix, Charlotte, places like that. Winston-Salem has it. It's just a little bit, it's not like this, it's like that, but it has it.
Yeah, very cool. Well, man, it's cool what you've done. And also, if this all, you was telling me off air, if all of this isn't busy enough, you and your wife just opened a gym, well, probably about a little over a year ago now, right? Tell us a little bit more about that.
Yeah, for sure, man. So we opened a gym. It's a Burn Boot Camp franchise, excuse me, out in San Diego, California, 2 weeks before the pandemic hit. So we had our grand opening March of 2020. Well, last week in February of 2020. And then 2 weeks later, pandemic hit. We had to shut down, quarantine, all that kind of stuff. And we were just like, whoa. And we'd already been trying to open this gym for like a year and a half at that point. And then we finally secured a location, finally got it built out, finally had our grand opening. And then 2 weeks later, shut it down. We were like, you've got to be kidding me. Like, unbelievable. But we've battled, we've hung in there. A lot of gyms went out of business. We've had to be very flexible. We've had to go inside, outside, at home workouts. We built an outdoor facility just to keep the lights on. And, it turned out awesome. I mean, we're up above 300 plus members at this point, which is a great number to hit. We're in the black, we're making money. And, unfortunately, some of our competitors around us went out of business, which has actually helped us. But man, it's been a battle, but it's paying off now.
Yeah, very cool. I was telling you as well, like, it's never a bad thing to have your own gym. If you like to work out and you have your own gym, it's kind of, but a lot of people who love working out, it's kind of a dream sometimes, to have your own gym, right? It's like
that was the great thing. Yeah. There were a couple comments on that. One, yes, it's awesome. I could go to the gym and work out whenever I wanted because it was my gym, compared to everybody else was just like, all the gyms were closed. You couldn't work out and you're working out with like cans of soup or whatever. And then the other thing is, when we were working out, we were doing like the at-home video Zoom workouts at one point. I was literally like, so we had our head trainer in our living room doing the workout. And then I was like the background person with, Richard Simmons was in the front. I'm in the background, like.
Awesome.
Pretty crazy.
Out of interest, what kind of workouts do you like to do?
It's changed quite a bit, right? I mean, I used to be kind of the regular guy, like go into the gym, do the heavy weights, do the heavy workouts, only heavy weights, and look at my phone for a little bit in between sets and all that kind of stuff. Now I only do Burn Boot Camp workouts. So they're all like, they're strength and cardio, but when the strength days are really a little bit lighter weights compared to, what you would normally do. So it's pretty interesting, but I've noticed the benefits of that, man. I mean, when you're lifting heavy weights, you're like all creaky and like, it's taxing on your body. But when you do a lot of cardio and a lot of like kind of lighter weights, man, I feel 1,000 times better. Like, my joints that used to be sore, or like, the creaks in my shoulder and my knees, like that stuff's all gone now. It's pretty wild.
Yeah, I know. I'm always being a busy professional like yourself, like, in your real estate and everything that you have going on. It's always interesting to hear what kind of workouts you do. And trust me, I know, like those lifting heavy days, when you're young, you get away with it, right? Because you can get away with bad form and lifting heavy and doing all that stuff. But then it catches up with you. Like, I've got a lot of aches and pains, like from when I was like 22. I'm like, why did I do that back then? But It's just, you change, you adapt as you get older. I think you get wiser as you get older.
Yeah,
as well,
yeah. But I'm sure you feed off of that too, man. I'm sure you work out every day. Like if I don't get my workout in, I just feel like a failure. I'm just like, man, I like mentally, I can't focus as well. Like it's such an important part of your day is to get moving and get some kind of workout in.
I agree. Just whatever, even if it's a 10-minute walk, I think it just makes a difference to your day. 100%. Well, cool, man. Well, as this show is called Wrestling with Real Estate, I'd like to incorporate some wrestling-related real estate questions. And the first question is, what would your wrestling name be?
That's interesting, man. I would say, let's go with Killer Cash.
Okay.
Because my old name used to be Cash. People would call me Cash. Like in college, in high school, from my basketball player. So people would call me Cash. So let's go with that one.
Okay, I like that. Killer Cash has got a good ring to it. Every wrestler has a special move. What is your special move in real estate?
I would say my unique experience as a big law firm real estate attorney, and combined with kind of my entrepreneurship and business acumen. A lot of people, a lot of lawyers, I guess, that, working in big law, it requires a certain amount of sophistication and attention to detail. And I kind of mentioned that before. You've got to be very responsive. You've got to be very meticulous, and you've got to have an above average work ethic. To build that many hours, a year, it just takes a certain person. So I think that goes a long ways. And especially with capital raising, as an attorney, you learn about something called fiduciary duty, which basically means you put the concerns of others or someone or something else above yourself. And when you're raising capital, I tap into that same sense of fiduciary duty to my investors, because you want to be very careful and to be great stewards of their capital and to treat it in higher regards than even your own. And I think that goes a long ways. And then on top of that, it's like being a lawyer isn't enough. Most lawyers are not business savvy. They are not, they're very conservative, right? They're like, tell me what to do and I'm going to do it well. And they're very smart and intellectual people, but they're not business savvy. I think that's one more thing that I bring to the table, that combination of, having that attorney background as well as the business acumen.
What do you think when people call attorneys deal killers? Have you heard that?
I have, and you hear it all the time, man. It's just in their nature. It comes with the profession, right? We've got to be mindful of the liabilities and the problems. We've seen it on the backside, what can go wrong. And a lot of business folks don't see that. Maybe they haven't been sued yet. Maybe they haven't, been to that part of the business. Hopefully they're not. Hopefully they have a good lawyer that keeps them away from it. But lawyers, that's their business. They've seen how things can go south with partnerships, with business deals, with loans. It's like they're just trying to take care of you. So there's a happy medium there, though. There's a happy medium between, getting everything right and getting everything that you want and getting the deal done too.
Yeah, interesting. I had to ask you about that.
Yeah.
What's been the biggest body slam you've taken in your real estate career?
Well, I guess I would say, I'm trying to think of real estate career. I wanted to just say med school, man, because med school, dropping out of med school was a big deal. That was kind of what I wanted to do, or what I thought I wanted to do for my whole life. What I told, how it goes, man, what everybody expects of you as well. My parents expected it. Everyone expected it. And it was just like, you're going to be a doctor. This is great. You're going to be the pillar of the community. And it's just like, well, guess what, guys, I'm dropping out. And that was that's a big body slam, mental hurdle to get over. And, it took a while to figure out what I was going to do next. But, I'm thankful that I was able to do it, because the sooner the better to figure out what your passion is and where you actually belong in this life.
And I'm sure it was easy once you got into law school as well, right? So it's not like you were dropping out from med school to be working McDonald's or something. Nothing wrong with working McDonald's,
right?
You know what I mean? It's
yeah. And my parents are big on education too. Okay. That's part of the reason I got my MBA, because I dropped out of med school, and it's like, well, now what the hell are you gonna do? I was like, I'm gonna go get my MBA, guys. All right, cool. I just stayed in school forever. Yeah, man.
Awesome. Well, so was there a moment, and maybe you just alluded to it, was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah. This is an interesting one. You can probably relate to this, man. Launching a podcast for me was a big deal. I joined Adam Adams. I don't know if you've had it on the show yet, but I'm part of his mastermind, and I joined in October of 2019. And, his big thing is, launching podcasts, getting a platform, hosting a meetup, getting this marketing game going. And, that was a year and a half ago. And I didn't launch until December of 2020. It took me that long to get myself up to that point, either A, because I didn't have a lot of time, or I didn't make enough time. You can always make enough time to make it happen. And B, because that wasn't in my personality, man. I mean, putting myself out there on a platform like a podcast or going on as a guest on a show like yours, if you would have told me that 2 years ago, I would have been like, you are out of your mind, dude. Like, no way I'm doing that. Like, I do not want to talk on camera or on a podcast or even write a blog. Like, that just wasn't me. I was just kind of like, put your head down and work type of guy. But it's funny how you develop as a person when you put yourself out there and you just start doing it. Like, you just take action, make it happen, and then you just get better at it. You get better at talking, you get better at speaking. That was one of the big things that, a big side benefit from the podcast was just becoming a better speaker. I don't know if you've noticed that or not, but just being a better speaker in front of people, in front of groups, it's just a lot easier because you're so used to talking.
Yeah. Do you know what I've noticed as well? Not that I was ever a bad conversationalist. I said I could hold the conversation, but yeah, I'm even better now. Just in general settings, if I'm just out with friends or people like that, you just naturally ask questions, and I'm like, wait, am I? Right. I acting like I'm in a podcast guest here or something like that? But it's definitely and it's just beneficial in every way. And I couldn't agree more, man. Podcast is. I love the fact that we both started because I think it's huge, man. It's huge in your development in every way.
Yeah, huge for personal development, huge for networking, and just, if you're putting yourself out there, people know you. I mean, it's awesome, man. I've had nothing but positive experiences so far.
Yeah. Well, cool, man. Well, hey, thanks for making the time, man. Thanks for coming on the show. Really interesting interview. I appreciate you sharing everything that you have going on, man. And how you transitioned from med school to working as an attorney to then starting out, house hacking and doing flips and still sort of doing that, right? Some smaller deals, but also then raising capital for bigger deals, man. That's a really cool journey, and I really appreciate you being on to share it. But before we go, let people know the name of your gym and how they can go there if they're in San Diego and they're looking for a great gym, and then how they can get in touch with you, all the socials, everything else you have to plug as well, please, man.
Yeah, it's called Burn Boot Camp. It's the only one in San Diego, so you can check that out. Just Google it and find it and stop by and let me know you found it through the podcast. That'd be great. Also, check out my podcast, the Passive Income Attorney Podcast, at passiveincomeattorney.com. And last, I have a lead magnet called a cash flow calculator. It's pretty awesome for especially passive investors. You can plug in how much you anticipate you want to invest, let's say for the next 5 years. Like, okay, I'm going to invest 100,000, 50, something like that. And it's going to spit out your returns and how much cash flow and appreciation you can expect. It's pretty powerful. You can find that at intelligentpassiveinvestor.com.
Very cool. Very cool. Well, cool, Seth. Hey, thanks for joining us. If you haven't worked out, go have a great workout today.
Will do, brother.